Good morning, good afternoon, good evening. Welcome to Minds and Money Online and our pitch battle featuring energy metals, battery metals today. My name is Ellis Martin. I am the host of the Ellis Martin Report. We are a global radio and podcast resource reaching out to investors all over the world interested in the mining and resource space. Each mining company today, and we have 4 of them, will have 3 minutes to state their case, make their pitch, and ultimately convince investors why they should risk $1 million of their money by investing it with your company. Today, we'll be covering a variety of commodities and potential opportunities in the energy and battery space. Keep in mind, management, projects, economic viability, share and or capital structure, jurisdiction, and markets are all important factors in selecting just the right opportunity. The most important component of any public or private entity for that matter is the skill set of the CEO as a presenter. At the end of the day, it's a pitch. In this business, we're all salespeople. Talk to us, inform us, charm us, convince us. After each 3-minute presentation, we are allowing 7 minutes for the panel of investors to question each CEO. As we've seen in the past, I expect these questions to be as direct as possible. Pull no punches. Let your skepticism and or optimism fly. After all the presenters have pitched and have been grilled by the panelists, we will ask the investor panelists to make their choice and cast their vote for the $1 million. There's a tie, and I certainly hope that there isn't. I will cast the tie-breaking vote. I will introduce our presenter companies right now and then our judges. Our first presenter will be Nikolaos, CEO of Blue Sky Uranium. Next, we'll hear from Belinda Labatte. That's Belinda Labatte, President and CEO of Lumico Medals. Sam Lee, President and CEO of Northside Copper Gold. Steve Hanson, CEO of Acme Lithium. And Jurie Wessels, Executive Chairman of Vanadium Resources. Our investor judges today are as follows: Chris Berry, President of House Mountain LLC. Christopher Ecclestone, Mining Strategist with Hallgarten and Company. Matt Geiger, Managing Partner of MJG Capital. And Vera Ivanova, Director with AMED Funds, that's AMED Funds. Let us begin our presentation. Just one moment here, okay. First, we have the pleasure of hearing from Nikolaos Cacos, the CEO of Blue Sky Uranium. Nikos, it's all yours.
Great, thank you for that introduction, Ellis. Thank you, everybody. Well, I'll just get right into it. I mean, investment in any business proposition is about opportunity, timing, quality, and the potential of the asset, and of course, management behind it. Blue Sky, a uranium, vanadium explorer in Argentina, exceeds in all of these qualities. Blue Sky has discovered in Argentina the Ivana deposit that right now stands at just under 23 million pounds of uranium and 11.5 million pounds of vanadium. But the real opportunity is that this deposit lies within a 145-kilometer long uranium district, the Amarillo Grande district, that displays geological similarities with some of the largest districts in the world, like those in Kazakhstan. Our recent PEA shows the very low cost nature of this deposit. Our cash costs come in at just over $16 a pound for each pound of uranium. In fact, if this project was in production, it would have the potential to rank amongst those with the lowest operating costs. Now, having demonstrated the low cost nature of the deposit, we're currently focused on expanding the size. Our current exploration program underway that's testing identified uranium targets represents some of the best value-added phase of the company. As results of drilling come in, this has the potential to significantly leverage the company's value. Our announcement of drill results this morning shows some of the best results as we stepped out 1.5 kilometers from our current Ivana deposit and got some of the best numbers. These assays suggest that the deposit that we currently have is set for expansion. Right now, we're focused on continuing drilling with other proven targets that are located within the vicinity of the current deposit. And all of this is happening in the backdrop of a rising uranium market. As the demand for carbon-free energy increases, the demand for uranium is also increasing dramatically. In the last 3 years, we've seen the uranium price triple to almost $60 a pound today. Argentina, the country we're operating in, is a nuclear country with unwavering support for mining, is looking to Blue Sky as being the potential first domestic supplier of uranium. Management of the company is run by the Grosser Group Management, a pioneer in mining in Argentina with 30-year record of discovery and success. We know we can effectively manage this discovery and the development process in that country. Blue Sky is an exploration company that stands out from its peers. Discovery and development of a new uranium vanadium district with potential to rank amongst the largest in the world with some of the lowest operating costs. Timing for uranium is now. Timing for Blue Sky is now. Thank you.
What a great presentation. Thank you for being very timely. I appreciate that, Nikos. Let's go right to our judges. Chris Berry, president of House Mountain, your questions.
Thank you, Nikos, for that, and hello to everybody. You mentioned it's a uranium and a vanadium deposit, and you've got a PEA, so you know something about the economics. What does the vanadium do to the economics? In other words, how does it improve it?
Well, the vanadium improves, it's an added credit. There's no extra cost to extract the vanadium from the uranium. So as it comes out, it precipitates also vanadium. Mm-hmm. And there, by the way, there's also a domestic market in Argentina to sell vanadium because of its bustling steel industry that it's got there with the oil and gas pipeline building. Vanadium contributes about 5 to 10% of the value of the overall project in the PEA. And in fact, what's interesting to note from today's announcement that we made, we note that the average vanadium price is significantly higher than what the average price was quoted in the PEA. So it looks like it can play a more significant role going forward.
Thank you.
Thank you. Christopher Ecclestone, your questions, please.
Hi there. Yeah, I've known this company for many years now. And I've also covered the Argentine nuclear market, and it's big, and Argentina is one of the leaders in nuclear technology in the world, believe it or not. Why are you not doing an offtake with the government? I know the government used to own its own mines, but it shut those down. Where does Argentina get its uranium from currently? And why aren't you doing an offtake? Because an offtake would obviously then help expedite a investment decision. And at what price, on a contract basis, would you make the decision to move forward with actually building something here?
Yeah, that's a good question. Currently, Argentina imports all its uranium needs. Uranium for Argentina comes primarily from Kazakhstan, and they pay a premium for that uranium. They pay anywhere between $65 and $70 a pound. Currently, we are in discussions with Argentina. They are aware of what we're doing. They're supportive of our work there, but we're not ready to put this into production yet. The exploration costs here are very cheap, are very low. We think there's more value to be added for our shareholders at this point with a small amount of money, because this deposit seems to sit within the first 15 meters on surface where we're working on. So in the next few months, we expect to continue our exploration program to identify and prove up more uranium. And at that point, we're going to enter into a pre-feasibility study. And that takes us to your last question there. At what price would we be willing to do an offtake? It would be at world prevailing. We would be doing selling uranium to Argentina at world prevailing prices at that time, whatever is in the market. But that's, I don't know if I answered your question there, Chris.
Okay, let's call that an answer. Matt Geiger, the floor is yours, sir.
Excellent. Can we get a bit more background on the actual asset here, including when it was discovered, by whom, when Blue Sky got involved, how many meters we've seen in drilling across the asset, and total historical expenditures as well, perhaps, maybe relative to the company's current valuation?
Yep. This is a discovery that's been in process for some time. We've been working in this district since 2006. So about 15, 16 years right now. And it simply has to do with a very a big size of property. It's a corridor about 145 kilometers long by 50 kilometers wide. And when we made the discovery, it was a grassroots discovery made by one of our geologists. It was actually it's a great story. He had a scintillometer in his car. He was driving around the country looking for readings to go off, and when it went off, it was at the very northern part of the property. And then we obviously focused our exploration up there, and as we extended down, we saw that this was a huge district. We staked this whole district, and we started mapping it and exploring it over this last 15 years of time. It wasn't really until 2017 that we really began to intensify our work in the southern part of the property. That's when we made the Ivana discovery. A year later, we published our first maiden resource. A year later, we published our first PEA. I mean, this process went very, very quickly. And now, well, there was a bit of a delay because of the COVID pandemic, which put things on hold, but we're in full swing right now. We've got another 5 targets that we're looking at drilling within the vicinity. We just completed doing some infill drilling on the current deposit and step out holes. So we've done to date probably around about 6,000 meters of drilling. And that actually yields quite a lot of holes, because the deepest holes really go down to about 25, 30 meters. So that kind of drilling does generate a large number of holes. It's relatively cheap to do the work there. I would say the amount of work that we spent over the last 15 years, I don't think I've added it all up, but I don't think that's I don't think it's more than 10 million bucks. I think it's a lot less than that.
Thank you very much, Nikos, and thank you, Matt. And we have time for one question from Vera Ivanova.
Sure, thanks. Nikolaos, just a question on your economics a bit more. You said your cash costs are going to be about $16 per pound. What's your all-in sustaining costs? That's first question. Second, do you have an early estimate of capital expenditure, pre-production and sustaining? And understandably, these are PA numbers.
Yep. Yes, the all-in sustaining costs are just over $18 a pound. Mm-hmm. Unlike those deposits in Kazakhstan, most of those which are in situ type extraction techniques, and they have quite a bit of sustaining capital that's required. In this case here, because our deposit sits on surface and it's in an unconsolidated or loosely consolidated environment, it really is quite cheap, and the sustaining costs are not that high. And in terms of capital expenditures at that time, it came in at just around $100 million with a $28 million contingency. And that was a significant number for us because, as we know that there are significant targets that we're testing within a 30-kilometer radius of the Ivana deposit, we're looking to create satellite deposits that could be fed with one plant. So those sustaining costs we project will remain relatively fixed. And as we discover more uranium, I think it's more, I don't know, for lack of a better phrase, it's more gravy on our meat.
And that is our time. Thank you very much. What a wonderful presentation, Nikolaos. Appreciate it. Next up, we have Belinda Labatte, President and CEO of Lumico Medals. Belinda, it's all yours.
Good day, Ellis. Good day, investors. You should be seeing my screen here. And it is my pleasure to present to you today. I invite you investors to join our new management team and new board of directors on a new vision and journey, because we believe that we can create a world of abundant renewable energy with Canadian critical minerals by putting people first. So the question is, with your $1 million, is it about making money or is it about creating wealth? What we're saying is that we have an operating team here and a junior exploration company with a strategic and visionary board who is looking to create value for stakeholders. And that's what leads to wealth creation. So that $1 million should be a 10x by investing with us. We are an experienced team, and we came together because we are looking to build a major new energy platform in Canada by being people first. We know we need to accelerate our growth in the critical minerals industry because we haven't done the work. We are 100% dependent on graphite coming from China, and yet we are so well endowed in the region where we are with crystalline flake graphite. So consider this. Investors, we're going to bring you not only the ability to create wealth, because we are going to work with all our stakeholders and our First Nations rights holders on this journey, but we're bringing you torque. We have the largest inferred resource in the region, 46 million tons inferred, and we're currently in a permitting process to bring that into the measured and indicated category. So we want you to come in early, because now is the time to create value as we go, to then bring that 3 million tons of in situ graphite, only half of which is in the PEA, to the supply chain for EV vehicles, not abroad, but right in Quebec. With our deposit alone, we can provide up to 30% of the installed construction capacity in Quebec at this moment, which is still not enough for the 1.5 million EV vehicles Quebec wants to see. The massive supply shortfall in graphite is only coming to the attention of people now, which is why graphite is a place to be, because it's been underappreciated and you can ride the wave going up with a responsible operator. 15-year mine life, robust production, 100,000 tons per year, and we are Eco-Logo certified. So we are working very closely with Quebec institutions. They want to see us succeed. So coming in as an investor with your $1 million is about supporting people who have a transparent, independently verified process to bring the graphite to production.
Thank you very much. Thank you very much, Belinda. That is your time. Very much appreciate your presentation. We're going to start right now with our investor judges, and Vera Ivanova, Director with AMED Funds, please.
Right, thank you. Well, I'll go back to economics again. I saw that you have done the PEA, so could you just walk us through just the highlights of the numbers, what they look like? You probably have some view on what the cash cost could look like, capex. That could all be quite interesting. And where do you stand across your peers when it comes to sort of position on the cash curve and capital intensity curve?
Vera, that's a great question. So our PEA is very interesting, and let's start with the most interesting facet of this, which is we have a very conservative price that we're using. So based upon the weighted average of the flake distribution, our NPV is just over $180 million, but based on a $900 price. All of our peers are using, well, on average, $1,600 in their PEA and their PFS, because they're already building in that price increase that we are certainly going to see in graphite. So what that means for us is that 186 NPV compared to our 19 million market cap has upside all the way to 600 million NPV, because that price increase wasn't used and that escalation wasn't used in the PEA. The cost curve, we are strong margins, just over $400 per ton, assuming $30 per ton of operating expenses. And we have a capital budget of just over $200 million, pardon me, by having a plant on site and dry stack tailings, co-disposable waste tailings facility, which is 85% dry. So that increases the capex somewhat.
Thank you very much. Matt Geiger, it's all yours, sir.
Excellent. Thanks, Belinda. Can you touch on the company's next 2 or 3 significant milestones here? And then also the working capital position and how many of these milestones you expect to be able to achieve before next financing?
Yes, as a full-time management team coming in, we got to work right away. And one of the things that we know is important in this accelerated environment is getting the metallurgical studies done. So what we're doing is taking more core samples. The PEA had a smaller 500 kg sample. Now we're looking at a 1-ton sample to really identify the technical thumbprint, as it were, the technical specs of our graphite for spheronization capacity, and really looking at the end product of our graphite. We're working with 2 groups. One is in Quebec, and I'm pleased to say the government supports that group with grants. And that's the one milestone. We're in a permitting process right now. We have a substantial drill program of 18,000 meters, and that will allow that conversion of infer to M&I to take place. So that's something that's really exciting to get involved with. And then finally, I would say we want to move further with environmental baseline studies, and we want to do that in collaboration with our community stakeholders, and really so that they can understand how we want to work and how we want to be different. So those are milestones The working capital position, we have just over $5 million in the bank, and we're using $3.5 million of flow through. And we certainly are looking to advance more studies. We're early exploration, so we will need to have more funding for studies as we go, but we consider ourselves to be in a really good position for these original phase 1 milestones.
Thank you very much. Christopher Ecclestone, it's your turn.
You're on mute, Christopher.
Christopher? Okay, then let's move on to Chris Berry.
Sure. Hi, Belinda. Thanks very much for your time.
Hi, Chris.
Just curious, talk a little bit more about the new management and new board of directors, sort of what was behind the shift and sort of what you have learned thus far, you know, in the new role there. Number one, and then number two, I think it was yesterday, the Canadian government talked about really getting behind Canadian domestic critical minerals resources. Just curious on your strategy there around approaching the government and trying to find that balance between public and private market funding.
Love those questions. We could talk an hour about that, but let me start with people. Let me start with people. We came together as a team to find the perfect company, the right vehicle, and then we found our board. We are majority female on our board. We are majority female on the management team. We're very diverse, as you saw. We have First Nations woman who is a friend and an advisor to me. So why are we all coming together? Because to have wealth creation, to really do something meaningful, there's only one way to do it, and that's by having a vision. And our vision is that we will work with people to develop the deposits that we have. And that is what everybody needs to be thinking about to accelerate critical minerals in Canada. So that's a good, I think, pivot to your question about Ms. Freeland and her announcement on Canada. She's using our key messages. We also are saying we need to accelerate the growth, but you can only accelerate as fast as your most time-consuming stakeholder and rights holder. Everybody needs to be on this journey so that we have permission to move ahead with drilling, with studies, with construction of these plants that we need on site. And so what we want to do is engage, and we've engaged with all of the ministries in Quebec, the Secretariat of Indigenous Affairs, the Ministry of Fauna, Flora, Minister of Innovation, and we're now doing the same with the minister in Ontario, who I spoke with over the weekend, because we want to be part of the conversation. And my role, my personal goal, is I want to bring in the First Nations and Indigenous people that I know and I'm talking to on that journey. They are absolutely key to developing the resource endowment in Quebec and in Canada.
Fantastic. Thank you very much for a wonderful presentation, Belinda. It's a pleasure meeting you here in this forum, and best of luck to you. Our next presenter is Sam Lee, President and CEO of Northside Copper and Gold. It's all yours, sir.
Thank you very much, and good morning, afternoon, evening, everybody. Thanks for coming to hear about Northside Copper and Gold. I strongly believe that copper is the ultimate electrification metal, and what we have here at Northside is a large, highly developable copper asset with a massive gold credit in a politically safe jurisdiction and extensive historical infrastructure. This makes us a top levered play in the electrification space. The common thread that is critical, no matter what flavor of energy supply or battery chemistry you believe in, is copper. Goldman Sachs is calling for an 8 million ton per annum deficit by 2030. That's 8 of the largest copper mines in the world that need to be found and built in the next 8 years, and could require more than $100 billion of investment. Battery electric cars take roughly 4 times the copper as an internal combustion car, and no matter what kind of power you generate, you need copper transmission and distribution lines to get it to the grid. Turning to our North Island project in British Columbia, Canada, we think we have one of the most sustainable and developable projects in the world. Underpinning our value is our preliminary economic assessment of $1.1 billion NPV after tax, using an 8% discount rate and assuming only $3.25 per pound of copper and $16.50 per ounce of gold price deck. Note that the copper price hit historical highs of $5 recently, and gold price hit over $2,000, as most people know. The study identified a large, long life project spanning over 22 years, which produces over 150 million pounds of copper equivalent each year, with first quartile estimated cash costs, and a capital efficient project with second to none infrastructure, resulting in industrial activity from mining and forestry in the region over the past century. We have a great team with collectively over 200 years of experience exploring, developing, operating, and financing mines worldwide, including Penasquito, Escondida, and Spence. Finally, we have exploration upside with 50 kilometers of extensive porphyry belt and 7 identified targets on the property, including the Northwest Expo target, where we recently announced a new higher grade zone with grades 3 to 5 times higher than our existing resources and more than double the average gold grade for a global porphyry. We have momentum on our side as our share price has more than tripled over the past 18 months as we continue to amass strategic investors, including Sprott, Michael Gentile, and Pierre Baudouin, with a number of exciting catalysts still yet to come. So there's tremendous upside for Northside based on fundamental valuation compared to other explorers and developers, as NCX is currently trading at approximately 0.1 times its net asset value based on analyst consensus estimates. That is, you get an over $1 billion copper and gold project.
Thank you, Sam. That is your time.
5 billion pounds of copper equivalent for less than $100 million today.
Thank you. That is your time. Appreciate it. Great presentation. We're going to start with Chris Berry. Your question, please, sir.
Okay. I guess talk a little bit more maybe about the metallurgy. You had your screen up, and it looks like there's copper, there's gold. There are a number of potential metals here. How much you know about the metallurgy?
Yeah, we did quite a bit of work on the metallurgy through our PA. I'm a metallurgist by training. I was an investment banker for over 20 years past that. So this is a very simple process: crush, grind, double stage crush, 100 microns, 30 microns, secondary crush. The copper exists in chalcopyrite, which reports out beautifully over 88% recoveries. The gold reports the pyrite, which is less beautiful, but think about it this way: 100,000 ounces of gold that we get and 100,000 ounces go into the waste dump currently. So right now we are working on improving those recoveries. We're right next to the BHP Island Coppers mine, which produced for over 24 years, same alteration, same chemistry, same metallurgy. They saw up to 70% in recoveries in that gold. And then what they determined was the higher gold grade, the higher recoveries. So we are undergoing MET testing currently to see if we could jack up those gold recoveries. In addition, we found the Northwest Expo zone, which I mentioned, which is approximately 1 to 1.2 grams per ton of gold. That's over 5 times higher than what BHP had in their Island Copper mine. That's over 4 times higher than what we have in ours. And what we found on a metallurgical perspective is that the recoveries increase as the grades increase in the gold, because the gold is essentially rimming the pyrite. As you can imagine, higher gold grades per unit of pyrite will increase recovery. So that's what's coming out in 2022 as it relates to that study.
Thank you very much. Christopher Ecclestone.
Does this deposit go below sea level? How near is it to the coast? And does that have any implications?
So what was the last question?
Does that have any implications?
Okay, yeah, so absolutely, and very positive implications. First question, it does not go below sea level. The second question is it's about 25 kilometers away to arguably the closest deep sea water port from continental America to Japan, which is where BHP shipped its concentrate, Sumitomo, high purity copper and moly concentrate with very low deleterious elements, low arsenic. That road access currently is there. Access to the property is only about 25 kilometers away from Port Hardy and approximately 30-minute drive along a paved road. So the infrastructure is extremely important to understand this story. You've got power, that 2 substations, one exists at the former Island Copper mine. I think I understand the origin of your question. Island Copper was actually subsea level. This at this point is not. This is a very positive implication, obviously being able to leverage BHP's infrastructure currently You literally can get on site within a 30-minute drive from Port Hardy. You don't need a camp to build a camp. BHP built, or Utah built the camp within Port Hardy. You don't have to move towns. You essentially have a TMF that's installed within the valley of Hushimu, which is self-contained. And in terms of water, we are obviously 25 kilometers away from a very close deep sea water port.
Thank you very much. Vera Ivanova, your question, please.
Sure. Sam, quick question. I found your last slide fascinating. Obviously, you had the run on the share price has been appreciating significantly, but the stock is still, the company is still significantly undervalued. I mean, especially if you look at your nearest peers. Do you have a view of why? I mean, is the story not coming across to investors in some way? I mean, have you been under the radar? Because you have a very big resource and a very interesting story.
Thank you very much. And that's exactly spot on. And so my background, as I said, I'm a metallurgist by training, but investment banker for over 20 years. I started in October 2020. We inherited this country. The chairman is Dale Corman, very well-known gentleman who obviously sold Penasquito to Glamis Gold Corp for $1.2 billion. He's the founder of Western Copper and Gold and in Northisle. And so the idea here was to take an asset base that which was put together by a gentleman named Jack McClintock, who discovered Spence when he was at BHP, and essentially project it in a way that I know resonates within not only the market, but the strategic itself. So certainly over the last year, it really has been a progression as it relates to getting the awareness out on this story. I've worked on over $100 billion of M&A and equity deals at my time with CIBC, where I ran the global mining practice based out of Vancouver. And I can tell you that this is a project that does resonate very strongly, certainly at multiple points in the cycle. And I do believe that from a timing perspective, we are just at that precipice of entering into the copper boom, as we saw circa 2001 to 2011, and with a different narrative this time around. It is electrification, it is battery driven, as opposed to perhaps China, which was determining growth as a part to the last cycle. So it's a part of it is awareness, and as I said, we have gone up over 300% since I joined. We've outperformed our peers. We continue to build the influencer. We still continue to build the strategic investor that is completely aligned with our shareholders, for which the insiders are over 20% of the company, including myself.
Thank you very much. I've got to leave time for one more question from Matt Geiger, and you've got just about a minute.
All right. Sam, can we touch on permitting and social quickly? On the permitting front, the next significant milestone there, and then social, do we have anybody living on the project footprint, nearest town? Do you expect opposition as you advance along the Lassonde curve, et cetera?
It's a great question. So BC is a very transparent area to permit. It's not short, that's for sure, but it's transparent. So as long as you follow the guidelines and the precedents, there's been over 7 of these types of projects that have been permitted over the last 10, 15 years. And there's 2 currently in the works right now. So it's very transparent. So the first 2 years is baseline, environmental baseline work, which informs the next 2 years of permitting. Then 2 years of permitting, obviously, is a regulatory and a government-driven activity. Having said that, if you have your First Nations consent, and if you start from the very beginning and have their input from the very beginning, then that permitting process, as it goes through the government, federal and provincial, is really more smooth than obviously having them take the
Thank you. I'm sorry.
Putting it back.
I'm sorry, that's your time. We really appreciate you today and your presentation. Sam Lee of Northside Copper and Gold. Thank you very much. Next, we're going to move along to Steve Hanson, the CEO of Acme Lithium. Steve, it's your turn.
Can everybody see the screen here?
Yes.
Great. Thanks, everybody, and great presentations, and great to see the panel here today. Again, my name is Steve Hanson. I'm founder, president, and CEO of Acme Lithium. We are a relatively new company, which I founded about 1.5 years ago. I've been in the resource sector for the past 30 years. I've worked on all 4 continents, and I've been CEO of a number of companies. I've been on boards, I've been an advisor to boards, and most importantly, I've been an investor. And really my goal here and vision here is to discover and de-risk and ultimately create value for shareholders. That's my vision in any company that I'm involved with. I've sold a company to Robert Friedland and worked out of Ivanhoe's offices for a couple of years. I've sold a hydro project to a mid-sized energy company. Rio Tinto came into my last project. It's a copper gold project. They are now running that project. And really the key here with Acme is ultimately to grow this business and then bring in a strategic and create an exit strategy for shareholders. Again, that's my number one vision here, is to create value. We're a project generator currently. We have 5 projects and we focus currently on the US and Canadian market. We have 3 projects in the US and 2 in Canada. I've had my running shoes on this past year. We've done our research. We've scoured continents around the world and looking for the right addresses to build our business. We have an exceptional market right now for lithium as a commodity. You all well know how things have exploded in the last few years. We've got strategically solid and important addresses to where we're located. All of our projects are located as neighbors of existing lithium production and mines. And we've got the team. I've surrounded myself with a team in Canada and the US that are experts in their fields and have built businesses over the course of many decades. So as you see here, our core project in the US is in Clayton Valley. We are contiguous and a neighbor of Albemarle's project in Clayton Valley, and we're going to be drilling here in 4 to 6 weeks' time, a lithium brine project. We have 2 projects in southeast Manitoba, north and south of the Tanko mine, which has been producing lithium, cesium, and tantalum since about 1968. So again, our projects are strategically located. We have extensive exploration plans for 2022, and our goal here is to discover and de-risk and bring value to shareholders. We have investors at a high net worth and retail level, and then we've had a number of institutional investors that have come along with us recently. So in a very short period of time, I've exceeded our milestones as a company, and we'd love you to come along with us and grow with us as we build our business at Acme Lithium.
Thank you very much. A great presentation and just under 3 minutes. Really appreciate it. We're going to begin with Vera Ivanova and your questions.
Sure. Steve, just for my information, I understand that you're pre-resource, correct? So how far are you, and I know this, drilling program, etc., but sort of roughly how far are you from your maiden?
Sure. We, unlike some of our other presenters here, we are an early stage company with our projects. Our project in Clayton Valley was held by a private owner for about 8 years. Due to my background and our team's background, we were able to acquire this project in less than a year ago. We'll be drilling here next to Albemarle. We're contiguous to the northwest, and we'll be drilling here lithium brine holes in the next 4 to 6 weeks. So we're hoping to make a discovery in Clayton Valley. My team was one of the first teams to have boots on the ground in southeast Manitoba in the spring. We were able to acquire 2 strategic positions in and around the Tanko mine. We've got an extensive exploration program planned this spring, and then we hope to be drilling that project in September of 2022 with an extensive drill program based on extensive work that we're doing this spring. We've recently acquired a project that's just north of Jindalee, an Australian company, and Lithium Americas in Thacker Pass. This is part of a nested caldera, a group of calderos that are in and around the McDermott caldera. We have geophysics going on there right now, and we expect to drill potentially a lithium brine target sometime in 2022. So we have multiple opportunities for investors. We're well capitalized, and we hope to be able to deliver on a discovery here for our shareholders.
Thank you. Matt?
Thanks, Steve, for the pitch. You mentioned that you guys are employing a project generator, a business model at the moment. Sounds like it's more of a hybrid PG model. Is that fair to say?
Yeah, I mean, project generator maybe not the right word. Certainly, it's a bit of a hybrid. My career has been discovering and de-risking projects. I always believe that in the permitting process is the most difficult part of these types of projects. And again, bringing in a larger partner, in my view, is an option for us as we discover and de-risk these projects. I've done that in multiple projects in my career in some very challenging jurisdictions around the world. And so ultimately our goal here, and again, I don't have a vision for this necessarily in 5 years' time, but once we have a PEA and possibly a pre-feas, is to bring in a bigger partner that can help us in bringing it in production. So as an early stage company, we'd like investors to come along with us as we discover and de-risk these projects.
Thank you very much, Christopher Ecclestone.
Nevada is much talked about in the lithium space, but why have we not seen any projects there over recent years actually come into production? Now, Albemarle's been producing for forever, but nothing else seems to actually come to fruition. Is there some sort of reason for that?
I think, there's only a handful of brine projects that are being developed in Nevada. And I think if you look at most of them, they tend to be clay. There is more challenging, metallurgy that goes on with those projects. We're one of only 3 brine projects that are being developed, in our area. We believe that ultimately going through the regulatory process with a brine project and new technology is going to be easier than certainly some of the hard rock and clay projects. It's not that I don't believe that those projects ultimately will get permitted. We believe that certainly our brine project is going to have a better chance. Obviously, with the Defense Act that took place last week with Biden's announcement, with this tailwind that's happening from an overall marketplace, I think we're going to see a number of these projects greenlit very soon. I believe there's actually 3 lithium projects in the US that should be greenlit here over the next 12 to 24 months. And it really is because we're facing a crisis for this commodity in the domestic market.
Fantastic. Chris Berry.
Sure.
You've got the last question.
Thank you, Ellis, and thanks, Steve. Just curious, I noticed that I guess maybe about a month ago you closed a $3 million placement with Waratah Capital, if I'm not mistaken. Can you talk about what they saw in your model or in the projects and how you plan to deploy that $3 million across your portfolio?
Sure. Well, I had almost $4 million Canadian in the fall in my bank, and we certainly had enough to meet our early exploration commitments. Probity, a mining fund, came in for $1 million in flow through in December, which I'll deploy in Manitoba. They saw what we were able to do and the quality of our projects, and certainly the quality of my background and my team's background. As you mentioned, Lithium Royalty Corporation bought a royalty in Manitoba, and then Waratah Capital came in and funded us. So we have just over $7 million in capital, in cash that we can deploy in our projects. I've got about $1.5 million program here in Manitoba, and then ultimately about a $2 million program in Nevada. So again, they certainly did their due diligence. They like the quality of our projects, and most importantly, they like the quality of the team that can advance these projects over time.
Fantastic. And that is, stand by, my clock here has gone dark. And that's our time. We finished early here with this presentation.
We have one more minor, Ellis, Jurie, Wessels.
No, I'm aware of that.
Sorry.
I was just saying we finished early with Steve's presentation. Thank you, Steve. I do have one question, since we have about 30 seconds, if you don't mind me asking. What is your share price right now, Steve?
We actually hit a historical high today at about $1.30 Canadian.
Okay, perfect. Thank you very much. And our final presenter today, last but not least, of course, is Jurie Wessels, the Executive Chairman of Vanadium Resources. Jurie, thank you for joining us today.
Thank you very much. I'm going to talk today about unlocking one of the world's largest and highest grade vanadium projects for a new era. Of course, that is the vanadium redox flow battery that might be playing a role. Firstly, we're fully funded to final investment decision. We have completed a PFS and are busy with our definitive feasibility on one of the world's largest and highest grade vanadium deposits. Our PFS indicated a strong financial outcome in PV8 of $1.2 billion and a 45% IRR, both post-tax. And the ore body is easy to mine, easy to upgrade to a concentrate. We're using conventional salt roast leach technology, nothing new. That's been used in South Africa for many, many years. and there is abundance of infrastructure in the area. That's all translated into the most competitive OPEX and CAPEX numbers I will show to you later. What's the global demand forecast? What's happening with vanadium? Well, it's getting pressurized by the need for vanadium redox flow. You can see on that left-hand graph that the pressure from vanadium redox flow is increasing. That's on the right-hand slide. That's causing a supply deficit from existing sources. And we then, of course, will be in place to fulfill that new capacity, which is about 5,000 to 6,000 tons. We will produce about 5,000 tons of vanadium initially. And what is causing this pressure? We think it's the tendency line that you can see in the dots. That's China has always been a net exporter. They seem to become a net importer of vanadium, partly also because of vanadium redox flow. Where's the project? It's located in the famous Bushveld Igneous Complex in South Africa, on the eastern limb, in close proximity to many other mining operations and vanadium operations. That's been going for decades in South Africa. And the ore body is flat dipping, gently dipping at 6 degrees. The entire ore reserve has got a 1-to-1 stripping ratio over the entire life of mine. And by the way, we're only using 12% of that resource to get to our 25-year life of mine. The concentrate grade is what differentiates this project from all the other projects in the world from a primary resource point of view. And the size of the deposit is, as far as we know, the largest in the world, which also gives us a lot of optionality. So a bit more on the PFS. We have a $231 million EBITDA per annum, $139 million average free cash flow for over the 27 years, 25 months payback, and of course the 45% IRR. Compared to our peers, we have a very modest market capitalization. I think our friends in Australia are doing an excellent job at that.
I've got to stop you right here. I apologize,
okay,
but you have your time. Thank you so much, Jurie. Great presentation. Vera, you're the first here.
Sure, thank you. Jurie, great to see an African miner on this forum. But I am biased, right? So just a question, you obviously, you're a little bit more advanced than the rest of the party here. Do you have a view on your path to production now? And you are fully funded to FID. Have you started talking to perhaps off-takers, or at least thinking about an off-take, project finance? What could it look like? And if I could ask another question is permitting status. Of course, South Africa is famous for sometimes its hurdles. IVULA, mining license, etc.
Okay, 100%. Yes. The last question, we are fully permitted. What we are waiting for is the water use license, but we can only do that once the DFS is done because of the civil engineering side of things. Then as far as funding is concerned, we are talking to off-takers, yes, and we are also looking at all the different ways of funding this through principal funding, banks, and the Nordic bonds. We believe it will be possible to get to a 60-40 debt equity split based on our ratios that we have with paybacks. So that's our next steps. Is really I'm just focusing on getting that runway on construction going. Once the DFS is completed, we do not expect it to deviate from what we already have seen in the PFS.
Fantastic. Matt Geiger?
Yes, thank you, Jurie. Can you touch on the company's enterprise value at current prices and how that compares to the $1.2 billion NPV outlined in the pre-fees? And then also, can you let us know the price assumptions used for vanadium pentoxide in that study?
Okay. Our market capitalization represents only 4% of the NPV number. We believe that will increase significantly once the market becomes aware that this will be funded. The Vito 5 price that we used was the 15-year average. We did it in June last year, and that is $9.03. It's now currently $12. I think there's a lot of buoyancy in the market to expect that that might be changing, but I think we're still going to stay conservative and stay with the $9.03 for the purposes of the DFS, at least to compare apples with apples.
The current valuation seems to indicate some skepticism from the market. What do you think is the main point of concern? Permitting, South Africa stability?
I think I don't think it's South Africa. I think it's because we've been flying under the radar for a very long time. People were not aware of us, and there might be some ways where people could think, especially in Australia, that Australian projects are better. Maybe we will be like any other South African producer of vanadium. There is a demand for it. There are many other companies that produce metals and have got resources that they're mining today in South Africa. This project will be no different.
Thank you very much. Christopher Ecclestone, you have the floor.
Thank you. Do you think that the titanium aspect of this deposit provides a bit of a kicker to the economics, particularly with titanium trade with Russia disrupted at the moment? And is there any way you can capitalize on that if your production is so far off in the future?
No, production is not that far off. We would be production in 2024, end of 2024. But titanium, the credits from titanium is not considered in our PFS. We are working on technology to capitalize from the titanium. We would expect some announcements on that coming through shortly. That, of course, would then push down our OPEX numbers even further. And yes, indeed, titanium is playing a large role. It's becoming greater, and we are seeing that as a cherry on the top, and something to hold as a surprise. Hopefully, that becomes a surprise later on.
And Chris, you have the final question.
Thank you. Some of your competitors in the vanadium space have really made a move towards vertical integration, looking at the battery business for the VRBs as well as the traditional steel markets. I know, that's maybe a little bit ways down the road for you, but what's your view on the potential for vertical integration for your company?
Well, I think it's absolutely necessary to do that, simply because the uplift that you get from, for instance, a VRFB battery is significantly more than you would get from selling the vanadium pentoxide. Another uplift that could happen for us is to produce the electrolyte from the currently that 98.5% has to be upgraded to 99.8. And I think it's from a steel point of view that will be a bit difficult for us to compete in. Although the likes of my friends at the Bushveld Minerals, they produce a nitrovan, which then has got a significant kick in, especially in China. So maybe that would be one of the ways one could do it. But we're starting off with vanadium pentoxide because that's the basis of where you would start, and then everything else would follow from there. Once you can go downstream.
Thank you.
Thank you very much, everybody. In the interest of time, we're going to move right along to having the judges take their pick as far as which company they would like to see a $1 million investment into. And we will begin with Christopher Ecclestone. Tell us your vote and tell us why.
Can I split my money?
Yes.
We split our money at the last one. It's $1 million. I'd give 600,000 to the vanadium story, and I would give 400,000 to the other vanadium story, which is Blue Sky.
I'm sorry, I have to interrupt you. Maybe I was unclear. You can only pick one.
We'll change the rules. Okay.
Well, no, my mistake.
In that case, I will go with Vanadium Resources. Thank you.
Thank you very much. And Chris Berry.
Blue Sky Uranium.
Okay, that was short and sweet. Anybody's welcome to state why, but let's just move on and ask Vera for her vote.
I'll go with Vanadium Resources as well. It's right grades, right stage of development for us. Yeah, and obviously I'm biased, as I already stated.
Thank you. Matt Geiger.
I'm going to go with Northisle Copper. I like the scale of the opportunity. I think the potential risks are clear, but if they can be successful on the permitting and social front, this is an asset that I could see being built potentially this cycle and more likely in the next couple cycles here, but it has scale.
Fantastic. And Chris Berry, we just heard from you, didn't we?
Yeah,
no,
you already got me.
I already got you. Okay, Matt, Chris, we got my gosh,
that's everybody.
I think that is everybody.
The whole
There's
gang.
4 of you.
Yep.
Okay. Well, then Vanadium Resources wins the $1 million. Congratulations to you, Jurie Wessels. You've answered some very tough questions in what has been in the past a problematic jurisdiction. It just shows everyone how important energy storage is, and vanadium leads the pack with that. So best of luck to you. Congratulations. Everybody did an amazing presentation. Very impressed with everyone. And I feel like I got a nice education today. And I may contact some of you after the fact, just because I'm a journalist. I've got more questions. So thank you again. And thanks to our audience online for this wonderful, your presence at this wonderful presentation here for the Mines and Money pitch battle in the energy metals space. Again, I'm Ellis Martin. I invite everyone here to join us for the rest of the presentations tomorrow. And also, I hope to see you in London at the beginning of May in person for Mines and Money. It'll be a great show down in the Piccadilly area, I believe. Thanks again to everybody at Mines and Money, and thank you, Andrew Stake, specifically.
Thank you.
Thank you very much.